Hello, hello, hello. Hi guys. Welcome to yet another Marketwatch live stream with me. This is Paul from Safehouse. Just to kick things off, just some housekeeping notes that please do note that all information on this live stream is for educational purposes only and does not constitute financial advice. Hope you guys enjoyed that short little disclaimer sequence. That was really fun. If you want to know more about that, you can go check out the channel. It's called Running with the Bulls. It's what we do when we want to have fun. Anyway, before I start rambling on, welcome to Wednesday's trading session. I've been hitting Asia and London pretty hard, so I'm a little weaned off pre-New York. But hey, anyway, the primary reason why we're all here today is because, as you guys know, for those of you who are actively trading, NFP comes out this Friday, February 7th at 8:30 a.m. Eastern. So that's 1 hour before New York Open, so that's pre-New York, as it always does, right? And usually ahead of that, what do we usually get, right? So for those of you who are familiar, great job. For those of you who aren't, it's simple really. ISM would release both their manufacturing and services PMI. JOLTS will release their job openings, right? ADP will release their non-farm payroll or non-farm employment change, which primarily looks at the private sector. And then of course, you have the regular weekly unemployment claims. That's tomorrow. And then finally, you get unemployment rate and non-farm payroll on Friday. So I was asked this question recently, which is how often does NFP drop, right? So NFP is a report by the Bureau of Labor Statistics in the US, and it is released on a monthly basis. And it's usually on the first Friday after the month ends, right? So to start a new month, the first Friday, that's generally when NFP drops. Why is NFP important? Because it shows job creation, right? And to see if more jobs were created or if less jobs were created. Alongside NFP is of course unemployment rate, which is something that I personally monitor very closely. And the reason why is because that impacts how the Fed reacts, right? Why is that? Because the Federal Reserve Bank adjusts their interest rates based on two things, right? One is inflation, and two is the labor market, right? So the Fed, unlike the ECB, has a dual mandate, and therefore NFP is critical. For those of you who've been trading, you would also know that generally things like CPI, NFP, they produce quite a fair bit of volatility in the markets. And so, it's trader's paradise from there. Do I take trades 10 seconds before news release? Generally, no. Because I don't like to gamble. And the whips, for those of you who've been trading some time, you'll be familiar. The whips can get pretty wild sometimes. It's just impossible to get stop losses, nicely in place. So I generally don't. My rule is I like to, if I'm going to take a position going into NFP, I like to do that, at least 2 to 3 hours before, right? Just so that, if I set up my stop loss, it's a lot further away from the break point, and if I have to adjust it accordingly, like at least I have some space, right? So okay, quite interesting stuff happening in the markets today. For those of you who have kept up with market news, if I'm not wrong, AMD and Google shared their earnings, and market participants found it slightly disappointing. Their stock prices corrected a fair bit. I think for Google it was like their worst drop in a year. And this is coming off the tariff announcement on Monday, which caused a gap in the market, a gap down in the market. And of course, preceding that would be the DeepSeek AI route, right? So exciting times in the markets. I think a lot of the lads on the team here at Safehouse, have reignited excitement over the markets coming into work. So anyway, that's the general catch up. One of the things I'll talk about in a bit would be SPX, the S&P 500. For those of you who follow us on X, this is one of the things I posted, which was the impact of tariffs. So the announcement of tariffs produced this gap down here. Where's my brush? Yeah, here. So this massive gap down here. This pushed down a lot of things. This pushed down the euro, I think Bitcoin as well. And then it was really hard keeping up as news started to come out. But when Mexico tariffs were confirmed to be delayed, we saw a solid push up from the CPI NFP range. And of course, later in the New York session, Canada tariffs were then delayed, and then we saw another push up. And of course, China tariffs kicking into effect, that pushed it down, and has since, the S&P has since, been caught in this micro range right here. Have we completely retraced that move from tariff announcements? Not yet. Still a bit to go. We haven't gone back into the DeepSeek range yet, but yeah, we'll see how things pan out today. Good news is that the S&P has reclaimed and backtested the 6,000 psychological level, which is orange line right here. So that's generally good. However, following the earnings release yesterday, I believe, things are starting to look a little shaky, right? And so this is starting to scare a number of or spook investors. And the primary topic today is diversification. I'm sure you guys enjoy Trump news. He today announced that he wants the US to move into the Gaza Strip. As you can tell, with announcing delays, announcing tariffs, then Reuters released a report saying that they've been pushed back, and then his press secretary coming out to say that's bullshit, and then crossing the deadline for tariffs, and then thereafter having calls with heads of states to then delay it. That produces plenty of uncertainty, Trump's inherent unpredictability, and of course volatility in the markets, as you can see here. And so what happens when this, when we're in this kind of environment, right? What happens is you have, your general flight to safety, which I also wrote about on X earlier. So what does that look like? Well, let's have a look. This is what it looks like. You got your traditional, traditional safe haven asset like gold, right? Everyone's favorite precious metal since the golden age, I guess. And yeah, it's been on a steady climb. The trade that I posted on X was right down here. It's really tiny. I'm on the 15-minute chart right now. And as you can see, it pushed up really well, taking out the then resistance level at 28.15 half. Then went sideways for a bit, right? So I was tracking this range, and then of course the bulls found support once again at 28.15 half, and then pushed up and just continued to carry along with the EMAs, both 9 and 21, pushing higher for new record highs, right? So this is a clear indication of that. You also have the VIX, right? So this is the brief that I gave to the members at Safehouse earlier. This was so the VIX, for those of you who are not familiar, The VIX essentially is an expectation of volatility on the S&P 500 based on S&P 500 index options, right? And this is produced by the Chicago, the CBOE. I forgot what it stands, the full name of it right now. Anyway, yeah, so this area that I highlighted over here, 36.19% spike up in volatility. This was, of course, during that period where the Fed made their last interest rate decision, which was to hold, stemming their cutting cycle. At the end of the year, December 20 something, yeah, December 19, December 20. Now, of course, you've had a more gradual one like here, which is about 18%, and then you have the sharp ones, right? This was 22.53%. This was pretty recent. This was on January 27th, and of course, the most recent one of 18.37%, right? This, of course, is the tariff one. So the tariff announcement produced an 18.37% spike up on the volatility index, aka VIX, for the S&P 500, right? And what does that translate to? That translated to the gap down right here. Okay, cool. All right. Let's have a quick peek at NVIDIA pre-market. As you can see, you know, this was the tariff spike down on NVIDIA, and is still maintaining a downward momentum, right? Of course, is it showing signs of bullish RSI divergence? Yes, it is. However, the divergence moves are very short-lived, right? So now the question is whether this can creep back in here. Okay, I just want to turn your attention real quick before I get into the whole Mag 7 story. So I'm going to hide all the drawings. Well, I shouldn't, but it's going to take some time to turn off all the stuff I had earlier. But let's just jump over to the daily. So one of the things I've been tracking, this is the S&P 500 since 2023, right? It's fundamentally just straight line up. Almost. I mean, we've had a couple of corrections, to be fair. To give you some context, where is it? Here. Okay, so this is what I've been looking at, right? Please don't mind the mess that is here, because those are levels that I'm using for the New York session later, so I don't really want to turn them off real quick. So please bear with me. This is the bearish RSI divergence that started to form all the way back in July of 2024. Of course, I did not spot this, what do you call that, in July, right? I spotted this around Trump's election. This line here shows when Trump won the presidential election, right? And things have seemingly been pretty bullish US all around since then. But the reality of it, if you look at price, right, is that it's been, well, it pushed up, yes, for sure. I think scratching just 6,100 or just shy of 6,100 on the S&P. But since then, it's been sideways, right? So that's why I have this daily range here. And what this essentially is a potential bearish RSI divergence. Why? Because RSI, as you can see here, right, dinged the upper limit and then made a higher high on price, right, while making lower highs on the RSI. So that's the divergence, right? We're getting some volatility right now, so I'm just going to zoom real quick before I get into the macro stuff. But yeah, so this is the 5 minute on the SPX. Potentially we have a what we call the EMAX setup happening. So generally I'm looking at the 2 minute and the 5 minute, right? 2 minute has already crossed, both 9 and 21 have crossed VWAP. And then of course you have the 5 minute, which has just crossed, right? Generally what happens in this kind of situation, what I'm looking for is I want to see a backtest and I want to see trajectory of the EMAs holding well on at least 2 time frames. For those of you who have joined us for previous sessions, you would have probably heard me say this a million times, but just in case we have new people joining us, welcome to the Safehouse Marketwatch live stream, whereby I just go through, my thoughts before the New York session with our members, and just talk through some of the things going through my mind. Yeah, so this is not a good news for the EMAX setup, right? So there's no magic setup. There's no setup that works all the time. None of my setups work all the time, right? And any system or setup or whatever you want to call it always produces false positives, right? So from that standpoint, I generally like to sacrifice a certain amount of potential profit for extra confirmation, right? So you've heard to say, like, don't catch a falling knife, right? Like, I don't like to buy at the bottom and then pray that price runs all the way up and then go on X and tell everyone, like, oh, hey, look, I called it, I'm so smart. Like, I don't give a shit about being smart. The only thing I need to worry about is about being profitable, right? So if that's your kind of vibe, be sure to claim your free Safehouse Access Pass trial in the description below, which essentially gives you access to the Safehouse team, and trade alongside other very focused independent traders. So if you don't want to trade alone anymore and don't want to trade with all the noise, you're more than welcome to come and join us. So yeah, claim your free trial. Anyway, back to what I was saying. Generally, I want to see a backtest on 2 time frames, right? And then I'll get in. So now it looks like bullish pressure pre-market is pretty hot. And I generally want to see on 2 time frames. 2 has already crossed, but it doesn't look very strong. It looks very looks like it's what do you call that? Weaning off a little, right? I want to look at the 15. The 15 hasn't crossed yet, right? So I got plenty of time. So yeah, let's see how this plays out. I don't have an open position with this just yet, but anyway, this is not a trading stream, but I thought it'd be fun to mention that. So yeah, fundamentally, it's, let's see if the bulls can defend VWAP, right? If not, the next time at 6,000. Cool. So let's have a recap of what's the kind of data that's come out so far this week, right? So on Monday, we had ISM manufacturing PMI. The previous reading was 49.3. Forecast was, forecasted to remain steady at 49.3, and there was a, decent, what do you call that, upside surprise for ISM manufacturing PMI coming in at 50.9. So what does this mean? 50 and above essentially means expansionary, right? So essentially, ISM is saying that based on the manufacturing PMI, the manufacturing sector in the US is starting to show signs of expansion. Then, yesterday, on Tuesday, JOLTS released their job openings, which was, I would say, as expected. Well, it's expected to come down, right? Because I think in January we had, was it January? I think it was January. We had a spectacular blockbuster job opening figures, right? Of a lot more jobs opening. Whereas this time around, it kind of tapered off, which is pretty normal. But JOLTS job openings came in a lot lower than expected, right? So it was a downside surprise. Yes. Okay. So good news. ADP non-farm payroll, which primarily looks at the private sector, employment change in the private sector in the US, has come in, right? And the figures are, previous was adjusted to 176K. Forecast was to come down to 148K. We have had an upside surprise release of 183K. So while market participants were expecting it to come in lower, a lot lower, it actually came in pretty decently higher, right? So that's good news. I am liking this support from the bulls right now, following the news release, and I'm just gonna put in a small position to see how far this thing can ride, because I'm not 100% focused on my position right now. So how do I set this position? Well, it's quite straightforward, really. Got in at what? What's my in price? 6 and 5. Where's 6 and 5? Oh no, 6 and 5 on my platform, but it's somewhere around here, just slightly above VWAP. My stop loss currently is under VWAP, and my long field take profit is, let me look at the chart, because you know, different platform, like this is the O in the chart, right? So it's slightly different, but it's somewhere around here. Yeah, so okay, I'm just gonna leave this cooking during the stream, just, you know, for funsies, because it's a small position. But yeah, okay, so good news. ADP, I'll go update the members in a bit, but yeah, good news. ADP came out stronger than expected. That's good news for the US. And as you can see over on the DXY, that has been making a downward shift. Now that produced a mini spike. Let's measure this up. Oh, 0.12%. So it wasn't huge, but that's pretty decent. Oh dear, sorry, I was just adjusting stuff on my trading platform. Okay, all right, so yeah, what's been going on with the DXY? This has been what's going on. So the spike up here is from tariffs, and then since then, after all the, you know, tariff delays and China's implementation and retaliation, yada yada yada, we retraced all the way back down to test 107.5 as support, fell under, struggled. As you can see, you can actually see the bulls struggling to keep it up. It's clean back test, and then since then it's been lower, right? So yeah, that's what's been happening on the DXY, which is the US dollar index, and of course you would have the flip inverse version, you know, on euro dollar, which is another asset that we are monitoring. So okay, what have I covered? I covered euro, gold, Bitcoin. Yay! So Bitcoin's pretty interesting. I briefed the members earlier today. We saw a strong rally, right? Let's see, where is it? Yeah, so because Bitcoin has weekend trading, so as you can see here, with tariffs on, right, Bitcoin traded lower and went to retest 92,230. I was a little bit disappointed. I was hoping that it would retrace to straight 8s, because I have a side bet with one of our members, Jeff. Jeff, I'm not sure if you're in the stream. Probably not. You should be trading with the boys on Discord, but yeah, you know, I have a side bet with him that I would take a big long, you know, if price does reach this. It almost reaches, I think I covered that in the previous stream, but this, again, you know, the bulls didn't let me get it, so that's fine. Bitcoin held a support at 92,230, pushed up, reclaimed 96,900, right? And yeah, pushed past 100k, right? Came back down, tried it again, failed, tried it again, failed, and went back to test 96,900 once again, right? So 100k seems to be a decent and substantial psychological resistance level at this point. 102.5 is looking pretty decent as a resistance point right now, right? And this was of course measured from quite some time back, so levels have been pretty decently respected. Zooming in to where we are today, as you can see, we popped over this 5-minute level, which I've had since midday Tuesday here in Singapore. And as you can see, we've backtested this level numerous times, right? So what's the market trying to do now? Well, as you can see, we popped over 98.2, fell under, tried again, tried again, tried again, tried again, failed, and now are trying once more, right? So I managed to get a decent long on the break here, but I what do you call that, took profit very quickly because it doesn't look like it had enough energy. Volume was decently low. I mean, that push up was on a volume spike here, as you can see, but yeah, you know, it wasn't a longer term trade, so I just closed it to scalp pretty hard. Anyway, yeah, so here's the one I'm watching, 98.2, right? It was a much deeper backtest, as more than I expected. The VWAP held well, right? So now the question is, as you can see here, it's pretty straightforward really what I'm looking at. Don't like to overcomplicate my trade ideas, but yeah, you know, the market's been trying to break back above 100k, right? Since then, since failing, and it's now trying to break above 98.2, right? So as you can see in this zone, right, it's been trying, and now it's going to try again. Will the New York session, you know, give it the push that it needs? We'll see, right? We'll see. So okay, oil is down. Yeah, so I need to flip this to resistance now. Since the push up, right? So oil's been pretty volatile as of late, right? But yeah, currently it has fallen. UK oil has fallen under 75.5, and of course US oil is pretty much showing the same thing at 72. Right? Okay, so what was the thing I wanted to talk about? Right? The thing I want to talk about was SPX daily level reset. So why was I looking, you know, at this bearish RSI divergence, right? I was looking at this because, you know, I think it's no secret for those of you who have been following, you know, macro analysis that's, you know, very readily available everywhere. Everyone and their mothers are, you know, betting on Nvidia. You've got young people, older people, even out here in Singapore, you know, looking for entries into Nvidia and other S&P 500 Max 7 stocks, right? And the real reason behind that is, well, you know, the US is showing plenty of growth thanks to the, you know, whole AI rally. Where else are you going to put your money for growth, right? So because of, you know, that, I mean, it's a very small sample, what do you call that, example, but yeah, fundamentally, you know, the question is where are you going to put your money to grow, right? And S&P 500 and the Max 7 has been, you know, rallying steadily, so I think, you know, that's your first go-to, right? Anyway, long story short, over concentration, overheated valuations are all the rage, right? On a macro level, there's the over concentration in Max 7 tech stocks. That's one. And two, of course, is the US sovereign debt issue, right? That since suspending the debt ceiling as of January 1st, you know, that's supposed to, you know, be lifted. But yeah, there's that situation as well. And I think the last thing anyone will want to see is a government shutdown, right? So anyway, nevertheless, despite, you know, identifying this bearish RSI divergence, generally what you want to see in bearish RSI divergence is you want to see the trend line break, you want to see a back test, and then you have your extended move, right? So these support zones that I marked out were target levels, right? And here's the kicker. I got a short here, but I didn't even get my first target level, right? Because, you know, things are still very bullish in the US, and in fact, we went in to make another high at 61.34. Right? Since then, you know, with tariffs, was this tariffs? No, this wasn't tariffs. This was DeepSeek, I think. Yeah, DeepSeek was here. Yeah, you know, since then, right, we've been trading back into range, so it's a little messy. I do apologize. But this is the daily range. As you can see, S&P is currently sideways, and this is the daily range that I'm looking at, right here. So I also have our event highs and lows. So I've got January's NFP, I've got CPI from January, as well as DeepSeek AI as, you know, key levels that I'm watching out for, right? The time now is 8:30 a.m. Eastern. Good morning to all of you joining us from the US. Yeah, that's essentially pre-New York has now kicked off. First 2 minutes of it, and in an hour New York will open proper, right? So anyway, without digressing, right, Bloomberg Intelligence released a report today, right, which, you know, I was surprised that not many people are talking more about it, but I just wanted to show it to you. If you don't have a Bloomberg subscription, that's fine. We do, and you can always count on us to, you know, summarize it for you. Essentially, the emergence of DeepSeek, which is China's version of ChatGPT, effectively wiped out $500 billion of Nvidia's value. Right, that was here. Right. Yesterday, Alphabet's disappointing earnings, you know, put the stock on pace for the worst drop in more than a year, right? Essentially, long story short, I'm not going to read the whole report because it's, you know, it's a good read. Don't get me wrong, Bloomberg, I love their reports. But yeah, essentially, the long story short is S&P has been growing, as we saw earlier, right? But as of Q2 or Q1 2024, right? As of Q1 2024, year-over-year earnings growth has been slowing steadily as well. So what happens is, you see, you have investors buying in a stock at, you know, crazy highs, right? Let's take Nvidia for example. So can you imagine, like, you know, the people who bought at like this old support level, when we were watching it back in 2021, right? Like, if you bought around here, now that prices have reached to like the 140s, like, you know, you'd be very happy, you know, your portfolio is going to look very, very green and you're excited, right? And other people are also excited for you and they want to get in. So maybe they get in here, right? Maybe they got in here. Right? Maybe they got in at this dip at 96. I know I have quite a number of friends who managed to buy in about 110, which is pretty close to where we are now. And, you know, they're all looking for higher. Can you imagine the people who bought in like here? Because you see, they're like, you know, rallies here, right? Let me zoom it in so you can see it a little bit clearer. So let's take an area where there's a lot of buying action. Say like here, right? Can you imagine the people who bought in at 116? Like, they want to see higher. They want to be just like you who bought at 33 or 50 or whatever, right? They want to be just like you. And how does the stock price go up? Well, stock price goes up, A, when more people buy, and B, you know, when more people buy, when, you know, earnings are good, right? The thing is, at some point, no matter what the earnings are, right, it would then disappoint investors or new investors because it's not as, you know, parabolic as they expected it to be. And even the slightest thing, the slightest disappointment in earnings, you know, would trigger people to start to diversify out of Nvidia, right? So yeah, essentially monitoring the year-on-year earnings growth is one way of seeing as to are we going to continue to see more parabolic moves with an equity market or not, right? I'm just trying to simplify it because I know there are quite a few people who are new to trading joining us. I shared it with one of my friends earlier, so hopefully she's in the stream. But anyway, yeah. So will we see what do you call it, this correction to the downside? Corrections are always healthy, don't get me wrong, right? I mean, for example, if you're in a position on Nvidia, then with a correction, generally it's not good news because you just want it to go straight up. Nothing goes straight up, it always ebbs and flows its way in a given direction. But for those of you who have closed out your Nvidia positions and looking to get in again, a correction would give you that opportunity, right? Just like how, let's say I wanted to buy a, I don't know, limited edition Pokemon card, right? And like now it's crazy expensive. The market corrects by 40%, which is a crash, right? It makes it cheaper. If I think that this has the potential to, be worth a lot more in the future, then I would buy in at a 40% discount, right? So it's very basic stuff, right? So yeah, essentially the report that Bloomberg put out was that, hey guys, things are starting to slow, and I think that's quite evident even as of late. Like say Nvidia is of course one of the big boys in the S&P 500, and as you can see here, right, we can see the bulls losing steam, right? We made higher high and we made a lower high on RSI. Let me just pull this up so you can see it. Right now, how long does it take for this to play out? This is on the daily chart. It could take weeks, right? But generally what the textbook bearish RSI divergence setup looks like is again like this. So I would then set up my targets to the bottom, right? Does it go straight down? Of course not, right? I think how far is it going to go? I don't know either, right? But generally from my experience and testing, right, it would find a level where investors would feel like, hey, this is a good time to jump back in, and then that's when you have your reversal, right? So that's why we set up targets. Cool. So anyway, back to S&P, right? So this has been a long time coming, right? And the idea is, while it may not have been textbook, right? As you can see, it front run. Oh, let me shrink this down again. It may have front run. Can you see here? Textbook says it needs to back test like that, right? But it didn't. Welcome to the real world. And yeah, it only extended all the way to the bottom of the daily range that I've been monitoring, right? At max best, and completely missed my target. Well, that's fine. It was a decent short still, but the reality of it is now price is in a range, right? And right smack in the middle of that range is your psychological 6,000 level, right? I can't see because I'm talking on stream now. I can't see. Oh wow, okay, TP'd out already. Cool. Yeah, so cool, we made money on this one. Nice. It's a small position, but that was quite fun. Yeah, there was quite a heavy push earlier. And yeah, I'm on the 10 minute. Why am I on the 10 minute? Okay, I don't usually use the 10 minute, but yeah, there we are. This was the trade we put on earlier. It's a very small trade, but RR ratio of 3.673. Just give it 3. Yeah. Pretty decent. Hope you guys enjoyed that. But yeah, you know, this was a pretty nice bang off the 6,000 psychological level. I was doing macro analysis at the point, so I didn't get this trade, but hey, managed to get it on stream, right? So that was pretty cool. Let's go down to the 5 minute. And yeah, so here we have it, right? EMAX setup. 921 EMA crossing VWAP steadily, right? And on the 15, you have it just about crossing, right? So essentially what I look for is at the 2 minute, I don't want to see like this weaving and bobbing in and out of VWAP. 5 minute is my primary. I want to see it nice and steady with a good trajectory. Good trajectory meaning it looks like this, not like this, right? So accelerating pattern, not decelerating pattern. And of course on the 15, you know, I want to make sure that, you know, the path forward is clear, right? So yeah, very easy trade. So that's one for the day, or the later half of the day. Probably gonna take a break after this. Yeah, if you guys have any questions, do feel free to drop it in the comments. Like the video, like the stream if you found it useful, and of course if you want to trade alongside our growing community of independent traders, you know, feel free to copy your claim your free trial of the Safehouse Access Pass. Right, it's been a long day of trading, guys. I'm sorry if I'm not as excitable or entertaining, but yeah, that was a pretty decent move. Let's go down to the 2 minute to see how this panned out. Yeah, okay, so it was just a decent spike up and then very quickly retrace. So it's not really the strongest push above, but hey, we'll take it. So okay, yeah, where was I? So finally, this is the daily range that I'm messing around with, right? The question now is, let me just delete all this text. It's so hard to read. Oh my god. And then put the range here so you can see it, right? So can you see this range? Please tell me you guys can see it. I'm gonna try and find the range. Where is it? Parallel channel. This is essentially the range I'm looking at. That should be a little more visible now. 6,000 psychological level is just right above it. And of course, you know, what I want to see is if the bulls can hold 6,000 with strength, right? Where is the path? Yeah. So if the bulls can hold, as you can see here, this is what's happened so far, right? And then I want to see price claim, and I think that'd be pretty nice. However, I am keeping note that I still have a bearish RSI divergence set up, and generally what happens after this is, you know, we may get a delayed reaction because price goes sideways, right? So I see it as every time we touch the upper limit of this channel, it's kind of like backtesting the what do you call it, bearish RSI divergence triangle again. So unless we make a higher high and we crack this trend downwards on the RSI, right, then it's invalidated. Otherwise, you know, it is still possible for this to get pushed out. Now, what catalyst does it need? It could be NFP, it could be, you know, I don't know what Trump's gonna do next, God knows. But yeah, you know, that could potentially happen, right? So yeah, on a daily basis, we're, you know, constantly monitoring it, and yeah, you know, scalping the market along, you know, until this longer term play starts to happen, right? Because if you think about it, right, there are quite a number of shorts here, right? So we could get a scenario whereby we take out all the shorts and then we swing down, right? That's one scenario. Second scenario, we take out some shorts, we back test with strength, and then we push higher, right? Third scenario is that we lose 6,000 and then we have a steady decline, break out of like this, like what happened here, break out of channel, and then after that we get that move, right? So multiple scenarios. We'll take it one day at a time, really. But that's one of the things I wanted to share with you all today for US equities, right? So yeah, please take note for those of you who are actively trading. I'm sure you know this already, but just as a kind reminder that on Friday we have NFP. Yeah. So what's going on with NFP? Average hourly earnings month on month are, stipulated to remain steady at 0.3%. NFP previously was at 256k. Market expectations are for it to taper off all the way down to 169k, right? If you look at ADP figures, that shouldn't be the case. If you look at job openings, there are less job openings, but I don't think, at least I have not seen on my radar, signs of massive unemployment other than, who was that? Salesforce, I think. Was it Salesforce? Let me check. Yeah, Salesforce cut 1,000 roles while hiring salespeople for AI, right? So they're doubling down on that. Yeah. So is it gonna come out lower? Anyone's guess, really? I don't work at the Bureau of Labor Statistics. I don't know, right? But market expectations are for it to come out lower. Now, what happens when it comes out lower? Well, for one, DXY is going to... DXY is likely to push down, right? So we have levels to catch for it. Well, key level I'm looking at is 105.5. That was very, very useful previously. Yeah, that generally doesn't spell well for the S&P either. So we might see that push down from NFP. We're not sure. More critically, it would be unemployment rate, right? If unemployment rate is still at historical lows at 4.1, expected to hold at 4.1% this Friday, right? If we see that go up, say 4.5, 4.8, like that wouldn't be great news for the what do you call that? For the labor market in the US. So, as I don't know if you guys listen to Powell's speeches, I try to tune in for every single one of them. Have been quite diligent with that, and Powell's Fed is very data driven, right? And so, if we get a stronger reading, right, in terms of unemployment in the US, then we might start to see cuts come back into play. As of now, rate cut expectations have dropped tremendously, right? The key variables at play here are that US economy is still strong. There is no major crash, right? The DeepSeek one got everyone riled up for a bit, but generally there's no major crash, as you can see here, right? Economy is strong. Inflation is still stuck. Do I have my inflation figure here? Let me see. No, I don't. I took it out because it always bugs out on TradingView, but okay. Yeah, anyway, inflation, what do you call it? There has been progress, but it still remains elevated. Was the last brief from Powell, right? If you guys are interested in the figures, I can pull it up. Yep. So the three variables are this, right? US economy is still strong. Inflation, it remains elevated, right? But has made progress towards a target of 2%, right? And the third one being that the labor market remains steady. Any change in these three would then, trigger the Fed to start to make adjustments, right? So for instance, if the labor market starts to deteriorate, we see high unemployment growing, and that could be a result of or trigger corrections in the US equity markets, right? So it works both ways. then that could be cause of concern for that would be cause of concern for the Fed with their dual mandate, and therefore, bring back rate cuts to the table. Yeah. And then we can see the rate cutting cycle, because currently at 4.25% to 4.5% is where the Federal Reserve is right now, right? Although everything is still steaming ahead, labor market and the US economy, it is still considered elevated, right? And fairly restrictive, right? So yeah. We got an indication late January, at the end of January, with advanced GDP quarter-on-quarter figures. This was a Thursday, so that was 30th of January. And there was a downside surprise for advanced GDP, right? Of course, it's advanced GDP, so it is not a hard figure. Nevertheless, it produced a 0.48% drop on the DXY. I'm just reading old reports that we share with our members on Discord. But yeah, where is it? 30th of January is here. Go to the hourly. 30th of January. Okay, I can't find it, but anyway, I'll figure it out. This one? No, this is 4 a.m. Ah, here. No, this 27. Forgot which chart I was using. Oh, is it this one? Did I delete it already? That's quick. 30th of Jan. Yeah, something like this one. I'm on the hourly, so it may not be accurate, but yeah, this was the drop, right? Cool. Thought I was going crazy there for a second. So yeah, that's effectively the reason why I'm watching, how things unfold. So yeah, that's pretty much it for me. If you guys have questions, do drop it in the comments. Otherwise, feel free to, if you want to jump on a call and chit chat about the markets, do claim your free trial of the Safehouse Access Pass. It's a free trial, right? And that essentially gives you access to the Safehouse team, myself, and the other guys, such as Luke and Wei. George is there as well. Luke is on stream right now, getting ready for the New York session. And of course, our growing community of independent traders. We go across asset classes. And yeah, so if you want to if you want to have a more focused environment where, our independent traders as well as Safehouse team are constantly sharing trade ideas with one another, watching each other's backs, and most importantly, locking in gains together, then yeah, do give that a go, right? Thankfully, because we don't rely on the revenue of the community, to upkeep Safehouse, yeah, the access pass is only $8 a month, right? So it's effectively like buying us, a Starbucks a month, I guess. Yeah, but yeah, because we're quite against the whole what do you call that? Charging people exorbitant amounts of money for like live streams and courses thing. But hey, so yeah, if you wanna catch up, chit chat over the markets, yeah, you can find me with the Safehouse Access Pass. Otherwise, generally every Wednesday. I wasn't on last Wednesday because it was Chinese New Year, Lunar New Year here in Singapore, so I was busy with that. But yeah, we're on station every day. But for YouTube and X, it's my first time streaming on X, so I think it's pretty cool. But yeah, those are generally on Wednesdays, pre-market, just so that you can gear up for the New York session. I am right now going to grab a coffee before New York Open, and yeah, join the other independent traders for yet another New York session. I hope yours goes well. Yeah, and I hope to see you in the Safehouse Discord or next Wednesday for yet another stream. Cool. All right, this is Safehouse Paul signing out once again. As a disclaimer, all information here is for educational purposes or entertainment purposes if you like, and does not constitute financial advice. All right, so thanks for joining. I really appreciate you guys coming by, and I hope you found this useful. Anyways, ciao ciao. I gotta bounce and make my coffee and gear up for yet another trading day. See you next week. Bye.